Okay, tonight the U.S. Federal Reserve is flexing its rate-cutting muscle. It remembers how to use it, trimming interest rates for the second time in 2 months. Now, the Dow was down by triple digits. It's now back up again, though. As you can see there, will likely end flat or maybe even up before the next few minutes are out. The Fed's latest move shows the U.S. central bank has been keeping an eye on a series of economic warning signs. Now, as we've been reporting, the New York Fed is offering tens of billions of dollars in liquidity to rescue the overnight lending rate, and disappointing earnings sent FedEx shares plunging. The delivery giant is blaming, in part, what it calls weakening global economic conditions. Plus, a new survey of America's chief financial officers shows quite a gloomy outlook. More than half of those polled expect the U.S. to enter a recession before the 2020 presidential election. Robert Shiller predicted the housing market collapse that led to the financial crisis in 2008. He has said that there's less than a 50% chance of a recession in 2020. He is a Nobel-Prize-winning economist, professor at Yale, and author of the new book, Narrative Economics. And Professor Shiller joins me now. And thank you for joining us. We'll just get to the day's headlines to start. An insurance rate cut, a couple of them from the Fed. You don't see anything all that crazy on the horizon in terms of slowing growth?
I hope not. Yes, I think it looks a little bit like 2005, maybe.
Okay.
That is that the housing market is weakening, but it's still going up. Mm-hmm. We had some good news about construction, and the general narrative at this time is not a sign of something imminent, and these things take. 2020 is only next year, and these things take a while. If you look at housing prices, in the last recession, they were softening for years before there was an actual recession. So I don't think, when I said it was less than 50%, that wasn't meant to be terribly reassuring, because
we
it's
won't
still
take it as such, then.
40% maybe.
Don't. That is pretty funny. You're still saying, pay attention to the 49%, you're saying, because there are some risk factors out there.
That's right. And the question is, will it be a mild recession or a big recession? That's something that economists are not very good at answering. So there is uncertainty. The trade dilemma is a major source of uncertainty that could harm confidence even more than it has already.
I want to talk to you about your book. We talk about narratives, and this is kind of a new, relatively new and uncomfortable space for economists when you start talking about the narrative and how it can move markets. How do you think what you call the data revolution will influence that going forward? Do you think it will confound us, which is what I'm afraid of, or do you think that data will give us more clarity?
Well, I was comparing it with another data revolution that came in roughly in the 1930s with the Great Depression. And that was GDP accounting. They divided up into consumption, investment, government expenditure, net exports, just the way John Maynard Keynes suggested they should be. And they had unemployment rates that were starting to come in for the first time. We had a generation of economists who analyzed that data. That data is very interesting, but it's also limited. But now with digitized data, with the vast data banks we have, and I'm talking specifically about text, human speech, in the form of newspapers, magazines, books, and even odd things like sermons or diaries are now searchable. And so we can get closer to what people are thinking. I think the economists will have several decades of work to try to really understand the thought process that underlies economic decisions.
But will that improve predictive capacity? Because that's we all want that.
Yeah, we do want that. And unfortunately, this is, to quote Alfred Marshall over 100 years ago, economics is not an exact science. And the reason it can't be an exact science is it's about people and their decisions. And people are, there's something that is yet all of our neuroscientists still can't explain what it is that goes on in our minds.
But your thought process in the new book is that there is a narrative there, and it does matter, and it is identifiable.
Yes, narratives come and go like diseases. I compare them to infectious diseases. Well, I use the phrase "go viral," which is a medical school metaphor. But ideas go viral, just as diseases do. And there are perennial narratives that I outline in the book that are there hanging in the background and ready to maybe mutate a little bit, or in terms of environment change, where the contagion rate will go up, and then it will gradually take over and become important.
Maybe controversially, you are quoted as saying that Trump, in terms of his economic thinking, is at times brilliant and at other times deranged. Please explain.
Did I say deranged?
You said deranged, at least as you were quoted as such just last week.
Yeah, we're all different in our intellect, and some of us have perspicacity about human emotions and how to move people. And I think Trump discovered something. It came out in his Apprentice TV series, something that people need and want, and he has built toward that. But you know, it's just, you must agree with me that the transcendence of the Trump narrative all over the world is just phenomenal. We talk about him every day. Of course, he is president of the United States, but we haven't been this attached to our current president, I don't think ever before. So it's a sign of what I call a constellation of narratives that all center on, in this case, one celebrity. And the narrative is crafted and designed. Trump carefully monitors his audiences and these various rallies and tries to amplify it. He's been doing this for 50 years. And it's a slow but steady process upward.
And as you said, it can be seen as that narrative going forward. Professor Shiller, unfortunately, we're out of time. The control room is relieved because we didn't get to modern monetary theory. You and I can have that conversation.
Yeah, that would be great.
Or read your stuff online about it for everyone else who's not part of the discussion in the commercial break. When we